Hey guys, so today I want to talk about two things. First, I want to answer some questions that people had on one of my recent articles that I published about how to find the 10x winners in crypto. Basically, I wrote about a framework that I use to find new and promising projects and make investment decisions. So a lot of people had questions on that, and I'm going to go through some of them, okay? And then I'm going to also talk about some macro update. Well, it's not really that much of an update, but FOMC had a meeting last weekend that caused some market turbulence. So I want to talk about that as well. But let's first look at this questions on this recent article. So basically, I published this article titled How to Find the 10x Winners in Crypto. So this is specifically catering to, not the Bitcoin and Ethereum of the world, obviously. Those you already know about them. But these are more like, small to medium cap projects that, it will take some effort for you to do research and to make a judgment on whether they are good investment candidates or not. So I wrote about this framework for like a 5-step process of how I do this. So basically, step one, you obviously look for projects. You scout projects and find a list of names that you think may be interesting, may be promising. And then step two, you investigate into each project. And then step three, you look at, you compare the current traction and the fundamentals to how much the project is, how much the token is selling for, right? And step four, you kind of play the devil's advocate. And if you think this is a promising project, it's a good project, then you try to ask tough questions, right? What can go wrong? What could be the risk factors so that you know what to prepare for? And number 5, you put all this information together and you make a judgment in terms of whether you're going to buy this, how much you're going to buy, and when are you going to buy. So all these, it's a lot of decisions, basically. Investment is the art of decision making. It's the art of take what you think the world is going, take what you think the economy or the industry trend is going, and manifest that, express that as an investment decision in terms of where you allocate capital, right? So that's what investment is about, at least a fundamental style of investment. So obviously there's some you can write a whole book about each of these steps. So, but just to roughly go through, number one, how do you scout for projects? I think primarily 2 ways. Number one is top-down approach, which is what I like. Meaning, you identify what are the upcoming trends, what are the next stage emerging, segments of the crypto industry that is going to likely see, bigger growth going forward, like I have talked about so many times in previous articles or videos. I think 3 things for this year and maybe beyond, actually it would be beyond, are infrastructure, like in multi-chain project, interoperability projects, and number 2, new L1 and L2 projects, and number 3, crypto gaming, which is the frontier of end user adoption. So these are my high level themes. So my job is to take these themes and go look for projects that fit these themes, and that will be the first pass of where you scout for projects. And there's also the bottom up approach. A lot of times that's what Reddit and Twitter and a lot of times these Discord channels or Telegram channels are for, because people show you their coins, right? So everybody wants to pump their coins. So a lot of times these information not useful, but at least when you hear a new name, and if the pitch sounds interesting, you do some research about it, or you add it to your watch list if it's of interest to you. And the other thing is that, especially in market downturn, you sometimes think the entire market goes down, but there are some tokens that don't, right? So a lot of times there are, 9 out of 10, there is a story behind. The story is not always the investment story, right? A lot of time, most of the time, it's a short-term narrative story, or it's some kind of market inefficiency, because these smaller, medium market cap coins, liquidity is low, so any kind of irregular, buying or selling can cause large swings in price levels. But still, when you see market goes down and these tokens, they don't, or they even increase for some reason, it's a good, like a first pass filter, at least to pique your interest to look into what's going on, right? So that's step one. Step two, you gotta investigate. This is the do your own research part, right? So what are you exactly doing research on? For me, it's 5 questions that you've got to answer. Number one, is the project solving any problem? How big the problem is, okay? Tiny problem does not make unicorns, okay? So it's got to solve a big problem, and an urgent, like a neck bleeding problem that people would actually pay money for. This is not just applied to infrastructure product. It actually, the problem solving, it applies to all the products, whether it's entertainment, luxury products, and things that you think are frivolous and non-essential. If you dig deeper, they are always solving a crucial problem, right? So this is Startup 101, so you don't need me to talk to you about this. So number one is the project solving a big problem. Number two is how much traction is it having, right? So which stage is the project is. And number three, what is the token used for? The token economics, right? The use cases of the token, the distribution, the supply, the schedule, the emission schedule, all that good stuff. Number four, does the project have any moat? This is really, really interesting and really, really important, because that's why I'm like really hesitant actually to invest in most of the DeFi projects. And actually, I talked about this a lot before. It's because it's so hard to build a moat in DeFi. And the easiest way to build a moat is through network effect and economy of scale. Network effect is basically a special case of economy of scale, right? So, but the typical case to achieve economy of scale is usually for, you typically in those industries that has a huge fixed upfront cost in order to get production running. They typically have large economy of scale, because when you ramp up production, the cost only reduce, because the fixed cost is already being taken on, and the more you produce, it's like each unit or each production expansion or growth is going to share some of that fixed cost. So that gives incumbent that has traction a huge advantage over new entrants. So you see this a good example in telecom, right? And also in banking. Telecom is probably a more interesting example, because here you have a high fixed cost, because you have to have a telecommunication network, AT&T or T-Mobile. They invest a lot into their infrastructure, right, to cover the nationwide network so this is a type of industry that has huge fixed cost. But when additional new users sign up for T-Mobile or for AT&T, if I have a new phone plan, or I add another phone plan or internet plan, it adds a minimum cost to AT&T, right? So that cost is declining. So there is a scale economy there. The bigger I am, basically, the better off I am, right? And at the same time, this is my advantage over the little guys who are just starting out, because it's just so difficult to build out that telecommunication network while at the same time building a customer base, right? Because everybody wants to go with the network that is the bigger network that has more coverage. So that's the example. The same fits for crypto projects, right? So what would be a good example for crypto? So I'll use the same example that I used in the article, which is the Octopus network. So this is the kind of, there's a network effect there. Why? Because the more, the more app chains this, the network deploys, it's going to, share the, verification validator cost of the proof of stake network. And also it's going to give more utility to the network token, which is the OCT token, right? So besides, there also more liquidity, among all these app chains when there are more app chains, compared to when there are just one or two app chains. So in other words, the more app chains there are, the better off this network is. So there is a economy of scale there, which is one type of moat, but again, there are other types. So that's something that you would need to look into specifically for each project. But and also you want to obviously look at how much traction there is, and if the team has made progress in executing their roadmap, that sort of thing, right? What's the quality of the team, and so on and so forth. That is the basic level I think you can do research on, even if you're not very technical. And then obviously after that, you want to look at compare this project with other similar competitor projects, in terms of valuations, right? You compare the traction level, the degree of problem it's solved, the difficulty or the significance of the problem it's solving, to the valuation of the token at the present level. And then you combine all these things together, you make a decision whether you want to invest, how much you're going to invest, and what is the good timing for invest. So all these things don't have very clear answers. It's all a judgment call. Like I said, all the entire process of investment and this style of investment, fundamentals, primarily looking at fundamentals, is going to rely on a lot of judgment calls, and which is also sometimes people just don't want to get into all this headache, which to me is a mistake, actually, because I think the process of actually doing research on these new projects, right? Doing research, actually think about, okay, what's the upside, what's the downside, what can go wrong, what can go right, okay? All those decisions, you're essentially practicing your investment skills. You're essentially learning. Like you go through these, you go through this process for a few projects. You actually learn a whole lot through this whole thing, right? So I'm just thrilled to be learning all day, every day. But it's exhausting. It takes a lot of work, that's for sure. So that's also related to some of the questions that are coming up, and there are some common themes, okay, in these questions that I'm going to address. So number one question from Simcha asks, and he says, in the equities market, most financial advisors, economists, and even Warren Buffett recommend investors to just invest in low-cost index funds. Okay, so basically some kind of weighted average of portfolios that these funds picked for you, that you just put money in there passively, right? So generally, this person says, generally it is very difficult to pick stock winners that will beat the market over the long term. So why is crypto different? Why not invest in crypto index funds instead of picking and choosing coins? Okay. This, again, okay, first of all, none of this is investment advice, okay? Everybody's situation differs, everybody's risk tolerance differs, and how much work you're willing to do also differs, okay? So if you want to do zero work, if you don't want to think about any of this stuff, I have nothing to tell you. Yeah, sure, you invest in index funds, okay? So that's what people do. That's why they are popular, because they're easy. You can invest in a DeFi index fund, or NFT index funds, or GameFi indexes. There are many of those out there already, even though it's a very new industry. However, that's not something that I would do. Why? Because it's just I'm not that type of person, right? I believe in my own judgment. I make many mistakes, but I learn from my mistakes and I get better. So if I just invest in some passive funds, I don't get any of those opportunities. Okay, that's number one, but that's actually the smaller part of the reason. The more like a bottom line related reason is, which is also one difference between crypto and the stock market or bond market, is this is a very, very early stage market. Okay, things in the stock market, everything that has IPO'd, at least you gotta have significant traction in order to, to do a public offering in the public market, right? And crypto is totally not the case. This is the VC play. This is traditionally a VC playground, right? This is traditionally the area for venture capital. It's very early stage investment. So, which means most of the projects are shit. Most of the projects are not going to survive because 95% of startups fail. That's just the fact of life. So this is related to, some people, they've been in crypto world for several years, but maybe they're not very familiar with the startup world. It's like they tell you all the shitcoins, all the altcoins go to zero, so don't invest in them. Well, guess what? Yeah, of course, 95% of startups fail. Crypto startups no different, okay? So of course most of the coins go to zero. It like specifically these very early stage, the so-called altcoins, right? But still, you cannot say they all go to zero, because if you invested in Maker, if you invested in Aave, if you even invested in Axie Infinity, even though I'm not a big fan of Axie Infinity, but if you invested those like 3 years ago, now you are doing way better than just holding Bitcoin or Ethereum. Okay, that markup, that increase, growth percentage is so much higher than the bigger cap assets. So that's also why people do venture capital, right? If there is no gain to be made, if the fact is 95 startup fails, then there's no point for venture capital, right? But the point of being venture capital is there are the 5%, or maybe there are the 1%, or even 0.1% that go to the moon, that become unicorns, and that make up the losses of your other 95%. So that is the VC mentality, right? You invest in 100 things, and most of them, they're not going to be stellar successes, even if you use your best judgment. That's just a fact of life. It's just a young thing, a startup project. There's so many things that can go wrong, right? Even if you nail all those 5 things I said, the traction, the team, the what problem it's solving, whether it has good token economics, whether it's got a good execution, even if you nail all those things today, there's so many things that can go wrong tomorrow. So it's really the uncertainty level is very high. So it's really nothing to be cynical about. It's just a matter of fact about this market. The only difference here about crypto and traditional startup is merely that in crypto you have liquidity. Now, traditional VC, you have to hold not the token, but you have to hold your shares for who knows how many years, 5 years, in order for a IPO to happen or for a private sale to happen, so for you to get some liquidity to take profit out, right? In crypto, you have a token sale on day one. There is a AMM somewhere, and then you have liquidity. You can trade tokens. You have liquidity from day one. Okay, so that is the only difference between crypto startups and traditional startups. The success-fail rate is probably about the same, but now you have liquidity in this very early stage market. That probably gives people the illusion that this is somehow this market is more mature, or somehow there is, a higher success rate in this market, or that's just plain not true. It's just the game has changed. This market has liquidity, but it does not, in any shape or form change the fact that this is extremely early stage investment, and you've got to use your judgment. Okay, So this is long-winded answer to this question, whether it's good to use an index fund. If you are a VC, are you going to say, okay, there are 1,000 startups out there, I'm just going to, invest equally $5 in each project? Are you going to do that? I don't think so. You still spend a lot of time, do your due diligence, try your best to pick the winners, even if you know that most of them are not going to work out. Okay? But still, your due diligence helps, especially in this early stage market, because nobody else doing due diligence for you. So that's reason number 2 why I would not why I personally am not interested in like index fund for crypto. But again, you do you have your different risk tolerance and your different lifestyle choices, and that's none of my business. Okay. So and also the third thing is there's really a retail advantage that in crypto that you do not have in the public market, which is that you can front run the larger funds, the VCs, and the larger institutional investors in crypto. So this is particularly true for those, I would say, not like early at the very beginning stage, like nothing has with zero traction, unless you get a free airdrop, then that's cost you nothing. That's a totally different question. But just in this twilight zone between the project has got traction and it's solving a significant problem and it's doing well, or it's starting to do well, and the stage when it's gotten big enough to get institutional liquidity. This twilight zone is the competitive advantage of retail investors. So I would say like between the market cap of like a $50 million to $2 billion market cap, given today's valuations, okay? I'm not saying that valuation is going to stay, but just given today's valuations, that's what I think is the range of advantageous for retail. Because if you discover some of those projects that are starting to do well but are still small, and you make the right bet and they continue to grow until they attract institutional money, that is really a 10-bagger or 100x bagger for you. Okay, so again, these are high-risk investments. I'm not saying you go all in on these, right? I specifically said in the article, you do your risk control. Obviously, how much you put into these projects depends on your conviction level, but I would say in general, 1 to 5% of the portfolio, right? Because these are essentially moonshots, right? But if you lose that 1%, it's you're not going to be like extremely devastated or anything, right? So but the upside is huge. This is like asymmetrical risk, so I don't see why not if it's projects that you have high conviction on. So you do your risk control, you do your own due diligence, and you continue to educate yourself and improve your process, and I'm sure something good will come out of it. But again, this is just the way I will approach it. And other people, you have your own different situations, and you obviously do your own thing. So that's question number 1. Question number 2 from Arthur. Okay. He says, how do you reconcile your framework? So what I talked about in the article. How do you reconcile this with Punk 6529's advice to survive? Okay. So just a bit of background. I think this person that he mentioned is kind of a pseudonym person, but basically he's an OG in the crypto space. And he wrote this thread a while ago about how to do crypto as a normal person, okay? I don't know what normal person means. I haven't seen a single normal person in my whole life. Everybody is different, but in any case. So so basically this also very, very smart and wise person is saying for a normal person, you probably better off just buy BTC and ETH because those are more proven projects. Obviously, they're probably more sure bets, and you as normal person, you don't know much about crypto, so why not just stick to those projects? And also they're larger caps, so in downturn probably lower volatility as well, and much bigger chance to survive compared to the so-called altcoins, which we already discussed are early stage investments and higher risk, okay, and higher failure rate. So how do I reconcile with this? I don't find a need to reconcile with this, because it's essentially the same question that I just answered. Okay, do you invest in just a large cap blockchain and Ethereum? Do you invest in token index that has a wide basket of everything in the industry? Or do you do your own due diligence and pick your own projects? These two, by the way, they're not mutually exclusive, right? Because like I said, because you will want to do good risk control for smaller projects that has a asymmetric upside, but also are very risky, right? So you want to control the bet size to be relatively contained, so that if the thing goes to zero, you will not be completely devastated or in a financially uncomfortable situation. And you can still invest in BTC and ETH, and I'm not saying you don't invest in those, okay? I'm just saying the smaller caps is where the retail advantage really is, and that's those ones likely give you more asymmetric upside, okay? So, and also, so those parts I already answered. And the other thing is, I really take issue I'm sorry. I have to go back to this thing about normal person. So this advice for normal person. I understand that is the most of the times, like the investment gurus would tell normal person, quote unquote normal people, to just invest in index funds and large caps, because obviously you don't know better, you're not an expert. But I think this really boils down to sorry for going a little bit philosophical, but it's seriously a fundamental difference in how you look at human potential. Okay, I don't see people as normal people. I don't see anybody as normal people. I do not underestimate people, and I believe at least most of my readers are extremely intelligent. I mean, I did surveys on this. 95% of my readers have college degrees and 45% have graduate degrees, okay? So if you're watching this, I assume you have a good head on your shoulder. And if you actually try to learn about investments, about crypto projects, and you actually invest in your skills, something good will come out of it. That's my baseline assumption, okay? I do not take people as normal people. So that's why, I think if you're interested in crypto, if you're interested in Web3, if you think this is the future, there's no reason to be lazy and not to do research about this, and to invest into and to look into projects, to refine your investment thesis. That process in itself is extremely educational, and you learn so much, right? And all of this you cannot gain by just following some hot tips from some gurus, or just put your money in BTC or some index fund. Okay, so there is this additional layer of it's both an investment in your financial future. It's also an investment in your human capital. And I believe in the future, all of us are going to become investors, and that's going to be part of our day job for all of us. If you read my most recent articles, which I'll probably talk about in next time. So I believe this is very worthwhile investment, and this is not rocket science. And so Warren Buffett would not invest in index funds himself. He tell other normal people to do it, right? He would not do it himself. He himself is a stock picker. He himself is a capital allocator, right? Why can you not do what he does? So I know you're saying, okay, this is unrealistic, Tasha. I'm not Warren Buffett. You're not Warren Buffett. So again, I truly believe this is all a learning process. And this is a fundamental difference in terms of how you look at human potential. And this is always how I look at it. I mean, for better or worse, you know I'm Asian, right? So in case you don't know, in case it's not obvious, I'm Asian. So I had tiger parents growing up. And my parents are very, very demanding, like a lot of Asian parents. Whenever I complain about, something too difficult, something is impossible, my dad's comeback is always, has someone else done it? If someone else has done this successfully, if someone else has made it, there's no reason that it's impossible. That means it's possible. And there's no reason you cannot do it. It's not like you're dumber than those someone else. It's not like you're missing a leg or an arm compared to someone else. So, possible. Okay? It's possible to figure out. So, all this digression is to say, I think it's a worthwhile skill to learn, and it's something that when you look back in the future, you will be very glad that you actually put in the time to learn about this new industry and to learn to refine your investment process and to learn to make better judgments, because all of this is about making better judgments. And you do not improve your decision-making ability by just letting other people making decision for you. Okay, that's not gonna happen. You learn about decision-making by actually put something on the line. So to actually make decision that has some consequences, okay? But obviously with good risk control. So next question from Michael. What do you think about Arbitrum or optimism if they come out with tokens? So those are like Ethereum L2s, all right? So if you listen to my previous videos, you know how I see L2s. I see them with no material difference from alternative L1s. I know technically they're different, but in terms of like economics, in terms of like investment prospects, I do not see them as a totally different category. At the end of the day, all it boils down to is whether this chain, whether it's L1, L2, L3, L what. At the end of the day, it all boils down to whether it's got traction or not. It's all boils down to how many people use it, is it growing, whether there are interesting and useful apps being built on top. So there are some interesting projects on Arbitrum, like Magic, for example, Magic Treasure, which I invested in, and some other, like a crypto, like some gaming projects. A lot of those are coming up. So I think there are some good projects in those chains already, and obviously they're growing. So if they come up with tokens, I would take a look. I would look into it, right? But again, the same thing. You want to look at, is there a moat? That is the important thing. How much traction there is. Is there a moat? How well the team is executing, and how expensive the valuation is compared to competitors, and the stage of the project, and so on and so forth. The same criteria applies. And also there are actually those two particular ones, they don't have tokens, but there are Ethereum L2s that already have token. For example, Metis, okay, which has done really well recently. Again, not investment advice, okay? But you can look into it, which is a new L2 that is a optimistic rollup on Ethereum, which does have a token and is growing very fast. That's all I want. That's what I'm gonna say about this, okay? But you go do your own research. Okay. So the next question from Must Try Harder. He says, this sounds like a lot of work. Be easier for me if you could just tweet a few token tags and then add not investment advice. Thanks in advance. It's so ironical that this person's username is Must Try Harder, and then he's telling me he doesn't want to try harder. Okay. So that's too funny. But really, it's the same thing as I just repeated so many times. From my point of view, it pays to not take the easy route on life. Even if in short term if it's more difficult, even if in short term it's more work. Even if you're like, oh, I have a full-time job, I have 3 kids, I have all these other things I need to do. Where do I find time for, crypto research? Yeah, I understand. But if you want this enough, you will find a way. It's all about, we allocate time according to our priorities, right? So if you don't want to do the work, and yeah, of course, just take tips from other people. I'm not saying that doesn't work. That totally would work, right? There are people who have paid services that gives you tips and show you like technical charts and everything. And so everybody's approach is different, and who am I to judge, right? Okay. Oh, by the way, this is also related to some. This is not in my question list, but I remember seeing actually quite a few of those asking me those questions like on Twitter, people asking me. It was like after this recent market downturn, right? So, but it's really like this month that we had some significant drawdowns, and people were asking me, are you still bullish on like XYZ tokens? So I talked about some tokens or some projects that I invested in, either on Twitter or in my previous videos, right? And then people ask me, are you still bullish on these? Or what do you think of these? Any update on these? So I just find this really interesting because it's really, you gotta realize these are actual companies, okay? Well, they're not, most of them not structured like traditional companies, but they are actual projects with people behind day-to-day working on those, okay? And progress, like in startup, it's really hard to actually get traction as a startup. And you work very hard every day, but the result of your labor may not show in like 2, 3, or even 5 years, okay? So it's just so interesting that I mentioned some token for the first time, and then 2, 3 weeks later, someone, pinned me and asked me, are you still bullish on XYZ? So I don't know what to say. It's like if I open a restaurant, right? I open a restaurant, I hire the chefs, I renovate the venue, and I bought the tables and chairs and dishwashers, and I'm doing all this work and I'm working my butts off, and I have some investors, and then if they come in at every day, then I ask me, oh, what's the progress today? Are you still bullish about this restaurant? And I don't know what to tell you, because today is not that much different from yesterday, We are making progress, yes, but it's very slow progress because this is actually a real restaurant. It's not built just in digits on a piece of paper or on a computer screen, though it does feel that way when you just look in your token market cap or CoinGecko app. It just number goes up and down. It feels like just a video game, right? But it's not. It's like these are like real projects, real companies. Things don't change that fast, okay? things don't even change that fast in 6 months or in a year. So I just don't know what to tell you. You ask me, like, I mentioned something, a project to you, and 3 weeks later you ask me again, do you have any update? Or has your opinion changed? How can my opinion be changed so fast? So yeah, unless you're reading charts, unless you're just trader, short-term trader, you're going in and out, and you just like basically you're just following market sentiment, and that is a totally different scenario and totally different approach. Okay. So next question, Christian S. How do you think about exiting, taking profits? Do you stick to targets or do you play it by ear? Okay, so several things here. If I invest in something, I have a target. Okay, the target based on, I think what the next milestone for the project would be. Okay, so with my very short-sighted human vision, how far I can see. So what would be how big this project can grow. Okay, so if that target is reached, then I reevaluate whether I want to get out or I want to stay put because now the fundamentals has improved and maybe I see a bigger upside ahead. So that's scenario number one. Okay. Scenario number two, this is no matter whether it's regardless of whether my target is hit or not, is whether I find another investment opportunity that I think is better, that has a bigger upside. Okay, that is the so-called rotation trade. So the rotation trade, you can think of it, there are two kinds of rotation trade. You can rotate because there's short-term narrative changes. And I do that to some extent. But the more important rotation is that you have limited resources. And you cannot invest in 10,000 different things, right? So you've got to allocate, there's an opportunity cost to your capital. So if you invest in something, that means you cannot invest in something else. So if I invest in project A, and a while later project B comes along, and if I think that one is better fundamentals, and also it's a better timing, it's of course you synthesize all these things together, right? And if I'm already made gains on this other project, initial project, then I may rotate, right? Because I just cannot invest in so many different things at the same time. So that's scenario number two. Scenario number three, this is related to macro, right? The entire market timing. So sometimes, like right now, we're getting there. It's like market is volatile, right? So you may want to de-risk. Like I have de-risked to some extent. I know a lot of people that de-risked a lot more. So so that's the other situation. It's like if your market outlook like drastically changed, but it's not like you try to escape the market. It's just you know that in the future time there may be a better entry point because the immediate, maybe the short to medium term market outlook is down. So so those are different scenarios. So three different scenarios I just talked about, right? So that's how I think about this exiting, taking profit, and so on and so forth. I hope that's at least some reference value to you. Okay. So then lastly, okay, we're running out of time. I want to talk about like briefly this Fed meeting last Wednesday. So we had a FOMC meeting of January, and then Fed came out saying, yeah, the broad theme is still the same as before. They're going to tighten, they're going to raise rate, they're going to start tapering, so on and so forth, because inflation is high, because the economy is hot, right? So you've all heard those before. The only thing new is that, at least to me, okay, I don't know about you, what your expectations were, but it came out somewhat more hawkish than I expected. Because last time in December, they said they're going to taper, yes. They're going to raise rate, yes, but they didn't say when, right? They're going to say, yeah, soon, yeah, when the opportunity comes up, when it's appropriate. The typical Fed speak, right? So, but last week they came out saying they're going to stop asset purchases in early March. So that is a very specific timeline that they didn't have before. And in fact, to be honest, that timeline is sort of earlier than what I imagined. I thought they'd probably start in Q2, like early Q2. They will stop like asset purchases, meaning like a balance sheet going flat, right? So it's sort of, I would say, a month early than what I had expected. Now, I'm not saying I'm representative of the entire market. Okay. But given the market response immediately after the meeting, I think it probably has something to it, right? So it is indeed a little bit more hawkish and a little bit faster speed than what market has expected. So they're going to raise rate. So starting March, and then stop asset purchases in early March. So we talked about earlier I think in the last video, right? So these Fed balance sheet expansion is heroin for risk assets. So that being taken away, it's going to take this addict a while to adjust. So my basic outlook is not changed. Basically, I still expect higher volatility in the short term, but overall market going sideways. I still see, a possibility that the strong alts will outperform even in this market because, BTC dominance is still very high, and the market is definitely not lacking liquidity. So that's where I'm coming from. Okay, why I'd say I think there is a possibility that you see another run of the strong altcoins as kind of the final manifestation of the speculative cycle. Obviously, those are like far deviating from fundamentals. So, but you can also argue, well, if we are in a risk-off environment, at least starting, then maybe it's less of a possibility that alts will perform, right? So that's the other side. So, but still, I think there is a possibility that the strong alts will outperform, will have another, small cycle of outperforming in the near term, in the next 6 months, I would say. But I expect after the balance sheet reduction starts, we're going bear. It's like the real bear market starts after the balance sheet reduction starts, which maybe maybe after. So what the Fed says is balance sheet reduction will start once they start raising rates. Okay. Once that rate hike train is on its way. They did not give a specific timeline, but if you think about it, okay, if you start raising rates in March, you can and also given that the Fed is in some sort of a hurry because they are sort of like reacting already to the inflation and the business cycle situation, they try to act relatively fast. So maybe sometime in Q2 or Q3. So the balance sheet reduction starts. So then after that, it would take market a while to adjust. Then, I think last couple of times it probably take the stock market a year to adjust to like a drastic change of direction of Fed balance sheet. Now, there are a lot of hopiums out there. Whenever I post something that says, Fed is going to raise rate, there are some bearish factors, there are always people telling me, oh, Fed is not going to raise. They're not able to raise because the debt level is so high, because they have to pump, they have to start support the stock market, so on and so forth. They may have a limited ability to raise compared to in normal situations when we don't have this over dominance of monetary policy. But that doesn't mean they're not gonna do it, because this is the duty of the central bank to have counter-cyclical policies, and they're already late. So they're definitely going to try to do it. And however mini adjustment, the elasticity or the sensitivity of the risk asset response to even a mini adjustment of Fed balance sheet is going to be pretty significant, I think. Given how reliant market has come to, relying on the Fed as the liquidity provider. So I think we need to be more realistic about this. Okay, so that's all I want to say for today. I will talk to you. I don't know, not next week. Next couple of weeks I'm pretty busy, but I will try to make a video maybe in the next couple of weeks. Okay, talk to you later. Bye.